Hi, Green Cross Paddy here. Been asked to do a video on gold, so just thought I'd review the long-term charts with you. Here's the monthly gold chart, and you remember that I said I was reading this as the end of wave 1 of a new secular bull market in commodities and gold. I was looking for a sharp correction wave 2. This was because the best read for this action since 2000 was very much as a wave 1, culminating at 1000. The new high did surprise, and an imaginative read I had was that this wave was a B wave, and we were going to come back down with a C wave of an running flat or an irregular correction, which would send the C wave all the way down to 700 or beyond. It's growing a bit tenuous, this B wave, and I'm not abandoning the chance that this is corrective action, but it is trying to paint a picture that it is impulsive. I do have a problem with that, in that this shape here in the area of wave 2 looks like it could be a triangle, and you couldn't have that as a wave 2 corrective in a new wave 1 if this was wave 2 in entirety, only a correction of 30%, which is unusual for a wave 2. Normally wave 2 is much sharper correction than that, but I'm not ruling it out. Conditions around the market is such that we might have only had a shallow correction of wave 2. However, if this is a wave 1, and we could read that that is wave 4 of the wave 1, terminus of wave 1 here, and then we could possibly be having the B wave that we thought was here at this point, and we would be falling back for a running flat in wave 2 of wave 3 of a higher degree. So the chart could stay very, very bullish indeed. What I don't like about this chart from a bullish perspective is there's absolutely no reason to be selling this market. So there's no balance in the market. It's completely saturated bullish, and if you see all the lines of resistance, it smashed through them all. We had a wedge set up here, which is a bearish formation. It ignored that, and it's gone skyward. We are in a parabolic situation. These always tend to correct sharply downwards. So maybe my read was wrong. This was wave 4. We've now got a wave 5 blow off top. And we'll come back to the 700 mark that I'm indicating I'd favour, because that would be a 50% correction pretty much for the wave 2, which would be a much more sensible place for a wave 2 to terminate. I have to say, my read on this I'm not completely confident with. It does look an unlikely trade, but that is why I'm favouring it. But time will tell whether the bulls are right, and this is just going to go completely upwards very fast indeed. So let's just turn to oil, because I wanted to see if there's any read on the oil chart which would help us determine where we were headed. I think if gold was going to fall, oil would too. I really did think this was an A wave. We were in a B wave, and we were going to come down for a C wave on oil after this top here. Was the correction down to nearly $30, the complete correction. I didn't think that would be the end of the correction. It was over far too quickly for my liking. I didn't like this as an impulsive move out of the bottom. However, where I would have thought that we would start a wave 2 down, this particular bar here is crying out as a 3-wave move, and whether that's a way of the market to avoid people entering this C wave, painting something as a wave that's 3 rather than 5. I don't know. But the certain pattern we seem to be in is we could very well still be in this wave B, and this is the B wave within the B, and we're headed up because there is a gap on the weekly chart. This is a monthly chart, about 110. Could we take out that with a deep retracing second wave of this correction and then fall down? The oil chart is really not one I'm liking to read at the minute, but we do have what seems to be a pennant shape, and I'd watch very carefully for this piercing the north side in a sustainable move, because it would move considerably higher. However, I think this is again the market trying to fool people. Given the position of gold, I would suggest that we are going to sell off, and it's going to be the hardest read of all to predict that on the oil market. We might have a failed breakout to the north side and a reversal, very much in the way that we have had just on the hourly chart in the last week. So oil gives no clues to me, and this makes me sound like I'm just ignoring the charts, but the fundamental backdrop is very, very gloomy. Now I've had a look at gold divided by T yield. That's the T-bond yield, 30-year Treasury note, and this is a logarithmic chart. I've chosen the logarithmic chart to show you first because the T-bond yield is always between 4 and 15% roughly over time. It can't go outside of that range really, within non-extreme conditions. So overall, the gold over T will be dependent predominantly on the gold price, which we're in an inflationary time for the last 80 odd years. Gold will rise with time overall, just as a general nature of the chart. So we'll look at the logarithmic to try and iron that out a bit. Now what we can see is we had a range, we broke out of it, we've never come back to retest it. We're in quite a tight channel. When these break, they do tend to break quite hard. I can't say it's going to break at the moment. However, we're at the top end of the chart, so it certainly, from my angle, wouldn't be a buy here on the gold and T-bond yield. So let's have a look at the normal chart for gold over T. Even if you thought we might fall and have a buy point at the bottom end of this channel, it does correspond to quite a big move here on the normal chart, which would take us down to around the 250 mark on the gold over T, and that could be because gold falls by 30% or the T-bond yield rises, and that causes this chart to fall. So this chart depends on, for it to fall, gold will need to fall and the T-bond yield will need to rise. Both bonds and gold are in a bubble at the moment, in my opinion, and that is why this is such a steep chart. So the best way to do this is to sell the T-bond and also sell gold as a pairs trade. You shouldn't lose money if you do that at a reasonable margin. What are the scenarios for the chart to return to some kind of old long-term support? Well, 70 is a critical kind of line in this chart, and when we get a parabolic move, we normally get a very sharp correction back to a low support. So at 70, that would correspond to gold being at say $490 and the T-bond yield rising to 7%, which is not it's about an average point really, 7-8% on the T-bond yield over time. So which will happen first, we don't know, but overall the direction I think will be down. We could also have, if you believe that gold is going to be stubborn and gold won't fall in value, if it stays at the current point of about 1400, for us to get back down to 100, we'd need interest rates of 14%. As we do think, or I think, that interest rates will come back, obviously, and when they do, it's going to be very aggressive rate hikes, then the gold price overall is quite well supported. If you favour the deflationary viewpoint, then even that is based upon a bond market collapse, which causes the deflation from people defaulting on their loans because of sky-high interest rates. They just can't keep up the payments. So I think the gold price will be supported fairly well in the long term, but in the meantime, I think the correction will start to happen because interest rates might edge up marginally, but the gold price starts selling off. So if T-bond yield only rises by 1 or 2%, then most of the contributing factor, if we are to return to these kind of support levels, will be the gold price falling, and that could be anywhere from gold falling by a third to about $900, or even to a half, which is my target point, $700. Hope you like that, and I'll speak to you soon.